Hello everybody. Today it's a great pleasure to introduce Hrishikesh here from the class of 23 MBA Executive IIM Calcutta. Hrishikesh is an experienced banker and he's very curious about the fintech industry and market, and perhaps the best way to understand his curiosity is to go back to Hrishikesh and start from the very beginning, so that Hrishikesh lets us know his journey in the banking industry. Over to you, Hrishikesh.
Thank you, ma'am. Thank you. Good afternoon. I'm Hrishikesh. I'm an experienced banker with a cumulative experience of 8+ years. Prior to joining this program, I was working as a manager in Canara Bank's head office vigilance wing. And before joining bank, I was an automation engineer. So you could say that I am an automation engineer in fintech who has moved to banking. So having spent the majority of my career in the traditional banking industry, I have always been curious about the growth of fintech and how fintech will be disrupting my industry. So here I am, and I have some ideas about fintech as a service, which is the main thing which I want to talk to you about.
What exactly is fintech as a service?
See, now fintech is a term which is, as you are aware, which means financial technology or any technology that enables finance. So fintech as a service is a buzzword which has been coined by a CEO of a unicorn firm called Rapid, while defining what his company does. So fintech as a service is a plethora of services, financial services, and what he said is that his company or any fintech as a service company will be providing a white label infrastructure on top of which many kinds of financial services, from disbursement to payment solutions to KYC compliance or forex or card issuance, anything can be built on top of this fintech as a service. So that's fintech as a service about. And coming to just about financial technology or fintech industry as a whole, seeing all these companies popping up and all these articles being written about fintech, one will get a misconception that fintech is a fairly recent thing. Okay, but actually one could not be more wrong, because the first instance of fintech, according to historians, starts in early 19th century.
Seriously?
Yes, when telegraph, which was the main technology at the time, was used to enable financial services. So that's the actual beginning of fintech. Now we have come a long way, of course, and it's a multi-billion-dollar industry, and they are trying to use everything from blockchain to even quantum computing to enable financial services. So of course, and as a naive banker, I was a naive banker, and my idea was that fintech will be coming up and taking over my industry, disrupting everything, and my career will be gone. But as I have progressed and I have done more research into the subject, I have come to understand that the future could be more of a collaborative thing and not necessarily a disruption of one industry winning over the other.
Could you enlighten us a bit more about this collaborative thing?
That's where this fintech as a service comes in. So there are some fintech companies who believe that they will be providing all these credit disbursements, credit appraisals, they'll be doing big data analytics, they'll be taking the digital footprints of the customers, and they'll be giving loans to anyone using an app with a few clicks. You don't have to step into any institution, a brick and mortar institution as such. But fintech as a service is a very different thing, because it can be used by any institution, including banks. So you see, now all the traditional banks have a legacy of more than centuries even. See, Canara Bank has a legacy of more than a century. And the technological adoption rate in traditional banks is really very slow-paced. We cannot blame them for that, because of their sheer size and the technical depth which they have accumulated over the multiple decades of trying to adopt new technology has made it really difficult for them to do all these things.
I just want to interrupt. You used a phrase called technical depth.
Yes.
What is that?
technical debt is actually pretty simple if you think about it. Technical debt is a jargon used in the technical industry which can be applied anywhere which uses technology. It means that once a new technology comes in, or if you are trying to do anything with technology, be it in programming or otherwise, if you try to go the easy way and you try to make some changes without considering for the future, what happens is you incur a technical debt. Like a financial debt, what happens is if you don't plan for the future, later on you will have to do a lot more rework to correct this, to incorporate newer technologies. Okay, so there is also a concept of technical interest as well, because you try to go the easy way, you try to do the easy way out, and what happened is you have to do a lot more work than what you should have done.
I see.
Am I making myself clear?
Yes,
I'm not sure.
yes,
All right.
yes.
So that's the concept of technical debt. So that's the same thing that happened with the traditional banks. What happened is whenever new technology came up, be it CBS or whatever, they tried to do the easy way and try to patch up their existing technological systems to incorporate those things. And what happened is now later on when they have to go for a newer version or something, they have to do it everything from scratch.
I see.
So if you are having a concept called Fintech as a service where people are concentrating only on the technical aspects and leaving the trust building or customer service or acquiring customers to the traditional banks which already have a large footprint in the country, it will be a much easier setup.
Okay, that's interesting.
Right.
Hrishikesh, could you let us know a little bit more about where is the future going with Fintech? Anything else that you can add?
No, I talked about the collaborative approach
Yes.
between Fintech and the traditional banking industry. So it's already started.
Okay.
So there are some banks already working in India which have moved to this collaborative approach, but they are actually really invisible. So to demonstrate that, I will like to ask you a question. Have you heard about SBM Bank?
No.
No, you should have, because it's actually could be considered as State Bank of Mysore, but it's
Yeah.
not the erstwhile State
Yeah.
Bank of Mysore. It's actually State Bank of Mauritius.
Oh, I see. Okay.
So State Bank of Mauritius is a bank currently operating in India, and they have a presence of only 8 branches across the country. Okay, it's a very small bank. And prior to 2018, they didn't even have a full banking license. Okay, they were just a branch, an overseas bank of the parent bank, which is located in Mauritius. Okay, so State Bank of Mauritius got the banking license from RBI, and they got the PPI license, which is a very sought after thing in the fintech industry.
And now you know what I'm going to ask.
Yes, I know. Okay.
So you may as well answer.
Right.
What is PPI
So
license?
PPI stands for Prepaid Instrument License.
Okay.
Okay, it's related to the lending license, which is offered only to banking firms or NBFCs.
Okay.
And PPI will enable you to issue credit cards or buy now pay later cards. Both are kind of same but different, but we need not go into that technical detail of how credit card and BNPL cards are different. It will be a really big discussion. So what happened is all these fintech companies want this license. Have you heard of, ma'am, you should have heard of Slice card, Uni card, One card, all these things, right?
Yes.
They are mostly digital cards, and they can even issue a metal card to keep in your purse. But majority of their work, business goes through the digital mode, right?
Okay.
So if you have ever used Slice card, Uni card, or One card, and many other such things, chances are very high that these were issued with a partnership of that fintech company, be it Slice, Uni, or whatever, along with SBM Bank.
Okay.
So SBM Bank is actually an invisible kingmaker in this field, and nobody knows about them. So this is a very small bank compared to Canara Bank, which has more than 10,000 branches across the country. This is a very, very small bank which has only 8 branches, but they have customers from 500 different cities in India, as well as they have an asset of 4,700 plus crores only in India. So
Wow.
that is the power of collaboration in the fintech industry. So if a very, very small bank like SBM can have this much business just because they are collaborating with all these new and upcoming fintech industries, we can imagine what a giant bank like Canara Bank or SBI can do.
I think we have the catchphrase SBM Bank as the invisible
Kingmaker,
kingmaker.
yes.
Thank you, Hrishikesh.
Yes.
And wish you all the best
Thank you, ma'am.
to become a visible king and kingmaker in
Right.
fintech if you do go forward.
Right.
Any last parting thoughts for all of us?
Parting thoughts, right. So I was thinking about the future of fintech industry as you were asking. I think that instead of being a competitive world, it will go through a more in a direction of a cooperation, and all these traditional banks which are existing since the last 100 plus years, they'll continue to exist, but traditional banking will cease to exist as we know it.
Okay.
It will move into a more digital friendly space, and most of these fintechs will get into a collaborative approach with all these banks, and I think I see a hybrid model of digital only presence along with some physical presence in India's banking industry.
Okay. Thank you, Hrishikesh. Hopefully someday you do a podcast. You should try. Wish you all the
Thank you.
best.
Thank you.
And thank you.